This video is sponsored by Noragon, the commercial vehicle data experts. Visit Noragon.com to learn more.
As 2025 kicks off, and that still feels weird to say, here on The Road we thought we'd begin the year by taking stock of where the trucking industry is. There's been, to put it mildly, a lot happening in the world recently. Don't worry, we're not about to start talking politics here, other than to ask, how will all of this political change affect the business of running a trucking fleet? It's a hard question to answer as we sit at the very beginning of 2025. The incoming new presidential administration is talking about making some big waves economically. On November 25th, President-elect Donald Trump announced plans to impose tariffs as one of his first executive orders, proposing a 25% tariff on all imports from Mexico and Canada and an additional 10% tariff on Chinese goods, all of which could make trucks, trailers, and equipment more expensive. When you add to that the upcoming EPA GHG regulations set for 2027 and the open question about whether those will remain in place, there's a lot that could happen and a lot we don't know yet. I certainly don't know all these answers, so I sat down with Eric Starks, chairman at FTR, to get his take. We had a good conversation, and I think I learned a lot from this one. Hopefully you will too. Let's go to the interview. All right, so today on The Road, we're here with Eric Starks, chairman from FTR. Eric, how are you?
I'm good. Oh, it's so good to be here. Thanks for having me. This is always a joy to hang out with you and do this.
Yeah, I'm glad to have you back. We last talked around the midpoint of the year. We're heading into 2025 now. I thought we'd have you back on to talk about, truck market, where things are going. There's been a lot happening, in the world
yes,
and in the truck market. So we had a lot to catch up on.
Yes, we do, and I'm up for it. So this is good.
All right. So let's start off with kind of the basics. Where we stand in the truck market as we head to the close of 2024.
Yeah, I mean, it's a fairly static market. We haven't seen a real fundamental change. If anything, we're probably on the upswing a little bit. We're not seeing things deteriorate though, but we just haven't seen a fundamental turn. So when you and I last chatted, the market was just kind of ho-hum, and we're kind of still there. And so when we start thinking about how are we going to end the year, what's some opportunities for upside, those get a little harder to see. But in general, if we kind of break a few things down, right? If we think about kind of like the spot market is an easy one. We look at that on a weekly basis, and man, that data has been pretty solid. It's just in the sense of it hasn't moved. It basically is sitting where it was this time last year. Amount of loads that are getting posted, the rates that are getting posted. So it's a very status quo type of environment. And then even when we start thinking about, contract rates, those have been, same type of situation. But capacity though, when we look at how much capacity is actually getting used out there, how many drivers are in the seats, all of this stuff, that is definitely starting to improve. So we're actually, and it depends on when we say improve, it's depending on which side of the equation you're on. If you are a carrier in a fleet, then it's improving, it's starting to tighten. And we're right now sitting about the historical average. So it means, in essence, the carrier doesn't have the upper hand, the shipper doesn't have the upper hand. So it is kind of at that equilibrium. And as we start moving higher, then the carrier starts to have more ability to increase rates and things like that. But right now, it's a fairly balanced system.
Okay, yeah. And that's kind of been, the story of the year. There's nothing too dramatic happening in the market. I know vocational's been strong, but the other markets have kind of been, as you were saying, pretty average.
Yeah, and honestly, what's interesting? So we able to look at some data on looking at splits between tractor and straight truck, things like that. So it gives us a better sense on the vocational side. And to your broader point, yeah, the vocational market actually has been doing better than the other part of the markets. But even that seems to kind of have started to settle down a little bit. So I think that's something we'll have to see a little bit more, because I think everybody thought there was going to be a lot of infrastructure investment, a lot of money being thrown that way, and you would actually see vocational, or at least some of the other construction type of markets doing a little bit better. And I think that hasn't really come to fruition the way people had hoped.
Yeah. So when we look at next year, there's a couple things kind of looming over the truck market. We've got the regulations, GHG and CARB coming up, and then we've got the tariffs that are being talked about as something the new administration might put in. And those could both have, huge impacts on the truck market depending on how they play out. So what do you think we can expect in 2025, as much as you're able to answer that question from here?
Well, let's put it this way. 2025 is going to be a challenging year for people to understand what is going on. And to your broader point, there are going to be a lot of different moving parts. So let's talk about that, the regulation stuff, just real quick, specifically as it relates to greenhouse gas, and then as we start thinking about some of the other regulations that are there. And there's always been this kind of talk about as we start seeing 2027 the rules coming into play. Do people do fleets pre-buy, for example? And we were always of the thinking and saying you don't typically pre-buy equipment, because why do you buy a truck? Why do you buy a trailer? It's to move freight. So if that's the basic premise, then you're not going to go out and buy that early. Now, if you believe the cost is going to be substantially higher, then yes, you will do that. But that's also typically when you know what the price is, or at least have a good sense of what that is, then you can put that in your calculation and say, should I buy it early? And what's really fascinating is we're not seeing fleets going out and buying early, even though there's been that talk. So we actually don't see fleets pre-buying or changing their buying behaviors next year. It's really going to be 2026 before that starts to happen. Now, having said that, then you throw in the other wild card is what you kind of talked about, is the new administration. So the incoming Trump administration they have a lot of things that they are talking about that I think have big implications for the industry to try and process. So one is the tariff situation. They have basically said, okay, 60% on incoming Chinese goods, 10% or even 10 to 20% on non-Chinese overseas goods, 25% on Mexico and Canadian goods. And that they're basically saying that he said from day one, Mexico and Canada right away, 25%, and then also 10% to everybody else. And that's just right away. And you're like, oh gosh, okay, that's kind of crazy. So that basically blows up the USMCA agreement. And you're like, oh gosh, this changes some of the equations. Let's talk about the tariffs for just a moment. And let's get into that, because again, we tried to talk about these in a vacuum, but you can't. So I'll kind of walk through it just a little bit. So one is our trade with Mexico and Canada. Those are our largest trading partners, period. So that is a big deal. That 25% is a big deal. That 60% for China is a big deal. It's less of an issue when you talk about the all other countries in that 10 to 20%, but that's still substantial. So if we think about trade initially saying, okay, if all things being equal, you increase those tariffs, then the inflation rate goes up, right? You're going to pay more for those goods. What can offset that? Well, the dollar will adjust in some way to try and offset that. It won't be able to do it in a way that is a one-for-one, because you have all these different moving parts, but it'll have some mitigating impact on that. But ultimately, there will be some cost associated that comes through that businesses or the consumers are going to pay. So we're going to have higher costs within that. if the expectation then is that you're going to start nearshoring more stuff, well, it would have made a lot of sense to put it into Mexico, and I think that's why the administration has said, "Oh, we're gonna put the tariff on Mexico because we don't want them moving it into Mexico. We want it to come into the U.S." So if that's the intent, then you have now the issues kind of I was talking about, not only the immigration stuff, but then we have already a tight labor supply market. So you physically don't have enough labor to reshore all of these different types of things that the administration is trying to do. And if you do, you're going to have labor costs that are going to go up. And so that creates another inflationary pressure. Finally, then off of that is, from an inflationary pressure standpoint, is there are some things that we can't do. We'll never do here in the US. So we're going to pay to bring that in, no matter what. That's going to be the issue. Now let me add one more thing, because I know I've been talking for quite some time and you have been a great listener, so thank you. So when we think about Mexico and Canada, though, how does freight flow within those particular sectors? Well, the freight market in trade with Canada is heavily centralized around that Detroit area. That is the biggest part of it, but that's also heavily automotive. What we have coming into the U.S. is we have a lot of raw commodities coming in. That's not just in that Detroit market. It's actually all across the north. So that is heavily what happens there. But we don't send as much back into Canada as they send down. So there's a little bit of an imbalance there. But if we start thinking about Mexico, though, well, Mexico, what do? We send down a substantial amount of grain there. We bring back a substantial amount of automotive there. We actually bring in beverages, and then we also then bring in electronic goods from there. Those are the three main ones that get transported up into the U.S. So there's a disconnect, and if we get into a trade war, we still need to bring the stuff up from Mexico with regards to automotive. They just can't bring it back into the U.S. right away. That's just not something that can happen. What gets really hit, though, is the grain market. So Mexico has other opportunities. They can look to South America. China is another grain market for the U.S. They can look elsewhere. So we see a really big disconnect in how the trade is impacted as a result of retaliatory tariffs that could happen, or not even retaliatory tariffs specifically, but retaliatory changes in who they buy from. So having said all of that, that creates a lot of risks in the system that are really a lot of unknowns, and you're like, how do I operate in this environment? How do I invest in this environment when you're like, I don't know what this means.
Right, yeah, that's a lot of unknowns. That's the main thing. But I appreciate you getting into that. It's a very thorny topic, so kind of digging through it.
It is very thorny, and people want to avoid it like a plague. And sometimes what we find too is people don't want to walk through the process, because it's very easy to take one side of that and they go, oh, inflation's going to go crazy, the world's going to end, right? And then the other side of the equation is, oh, this is a very business-friendly administration. We're going to be able to grow and everybody's going to be happy. And it's much more complex than that.
Yeah, definitely.
Yeah.
So if I'm a fleet, and I know you got into this a little bit, but if I'm a fleet, probably what I'm wondering the most is about costs. You know, a lot of these costs, depending on how it all goes, if trucks, parts, components are being built in other countries, that cost could be passed along to the fleet. From that perspective, is that something that they need to be kind of keeping in mind as they set their budgets, or is that a wait and see? Like, if you're a fleet, where should your head be when it comes to this?
Yeah, you need to be paying a close attention to that. Specifically when we start talking about new equipment and then replacement components. So, and I think honestly, replacement components is going to be one that's going to be part of that as you think about how much it's going to cost to do regular maintenance. Where are those components coming from? Are they single sourced? What does that look like? But clearly, there is going to be some potential winners and losers on the new equipment side. You have a substantial amount of units that are produced in Mexico that are coming up here into the US, and it's not evenly distributed among the OEs. So you're going to have some things there that you're going to have to figure out. So they're going to have to be starting to talk with the OEs to understand what does that look like. The other part of it then is almost all suppliers to a truck, or not all, let me rephrase that. Parts that go into a truck, you're always going to get something from abroad. You're always going to get something from Mexico, whatever that is. So your content is not 100% sourced in the US. It just never can be. So trying to understand what does that ripple effect look like as you start thinking about who's producing what where. So it's because they're producing so much down in Mexico from not just a new truck standpoint, but also from a component supplier standpoint, there is no way that you are going to get away from having some type of an impact with the tariff situation. It's going to get there, whether it is a cost or if it is going to be changing the components or whatever that looks like. So I think as a fleet, they're really going to have to be paying close attention to that and start to understand that supply chain and how that is going to impact them. I'm less worried about shortages of equipment. That's not really the issue. It's going to be more about the cost, and are things then shifting. It's very possible that maybe one company is struggling for a particular part because they are bringing a lot of stuff from overseas, cost structure isn't working, and they may have to then start looking at other suppliers. So those are things that they're going to have to really think about. And I know that some of the suppliers, it gives them heartburn to even think that those are some of the things that they're going to have to be dealing with. But I think that's the reality of the situation.
Yeah, definitely. And from, a fleet perspective, you probably have to start paying a little bit more attention to where everything you buy comes from than you would ordinarily. It's not something that's, at the top of your mind necessarily.
Yeah, and absolutely, you're absolutely right. So, and you always had, some tariffs on things. You were always dealing with some of it. But to be so broad-ended now that you are going to feel it in some capacity. I mean, it's just, if the administration goes through what they're saying, then everybody's going to feel it in different ways, and some are going to feel it more, some are going to feel it less, and we just don't know how that is going to play out for everybody. But it'll clearly be there.
Well, there's a lot there, so I appreciate you walking us through it here. I feel like I know a lot more than when we started talking, so I appreciate that for sure.
Well, good. I feel like I just taught myself something too, so that's always a good sign. So I'll take.
Oh, that's great.
Yeah.
Well, Eric, always a pleasure to have you on the show. Thanks for coming on.